Good evening, I'm Vikram Oza. You're joining us on The Big Question here on NDTV Profit, and this evening we're taking a look at a story that sits at the intersection of the markets, regulation and indeed perception. The Washington Post, the newspaper, has alleged collusion between the Indian government and LIC. This has happened in the past. Now the Life Corporation of India, LIC, has claimed that funds were channeled into the Adani Group companies at a time of rising US scrutiny and debt concerns. But the Finance Minister, Nirmala Sitharaman, has rubbished those charges in Parliament, saying that LIC's investment decisions are theirs alone. They are fully independent, is what the Finance Minister has said. And she says they are governed by strict due diligence, audited at multiple levels, and are overseen by the insurance regulator, the IRDAI in this case. So the numbers tell their own story too. LIC manages more than 55 lakh crore rupees of India's savings. And that amount is invested across 300 plus companies. So its exposure to the Adani Group, with both equity and debt, both of these combined, is still under 2% of Adani's total debt. It ranks far lower than its holdings in Reliance, in Infosys, TCS, HDFC Bank and Hindustan Unilever. Now, LIC had called these allegations false. LIC had said they are intended to tarnish a 70-year-old institution which is crucial to India's financial stability. Which is why tonight we're asking why the Finance Minister denying any kind of steering of LIC's Adani investments. Is all of this targeted criticism that is coming through, is it damaging the credibility of India's largest insurer and in turn the country's financial stability? And that's a big question. We're taking it across to our panel. Let me introduce you to them. Arindam Guha is joining us. He's founding partner at Datavantage Advisory. Along with him, we have Sanjay, senior partner at Crawford, Bayley. Nilesh Sathe is also with us. He's former member of IRDAI. And Shriram Subramanian is here. He's managing director and founder of InGovern. Great to have you all with us. Mr. Sathe, if I may begin by asking you, by way of the credibility that financial institutions in India have enjoyed and have created this sense of credibility around them, when you find targeted criticism coming through, do you think it damages that?
No, we don't know intent of such criticism or the agenda behind it. But I can only say that as a regulator has ensured that the investments are made in a systematic manner as per the exposure norms which are allowed, and any sort of outside interference is not allowed. So from regulators' point of view, these are the three things which that is, as regulators have always been insisting on. And again, as I said, whatever has been talked about in Washington Post, again, we don't know the intent. But the fact remains that such type of interference from Finance Ministry appears to be baseless, for the reason the total exposure to Adani Group is also pretty low as far as LIC is concerned. And without any research report, no investments are made. There is an investment committee which approves the investments. So I think it is incorrect to say that only with interference of Finance Ministry in particular shares LIC invests. This is definitely damaging to the public sector,
yes,
especially LIC, which is one of the biggest domestic investor.
So that's exactly the question, Mr. Guha. When you talk about the Adani Group, they have their core infrastructure businesses, there is sports and energy, and they've reported steady cash flows. There is substantial asset performance improvements that have happened recently. So when institutional investors prioritize long-term performance, when they look at that aspect and they look at underlying financial strength, at what point should that fundamental data outweigh any kind of skepticism that is driven by some kind of narratives that may have even occurred in the past?
No, I think, Vikram, the main issue is there are clear guidelines, investment guidelines for insurance companies, which are easily verifiable, in terms of specific investments made. So I think the larger issue here is of perception. You see, today India is the fourth largest economy in the world. And the way today geopolitics is evolving, it is pretty much a competition, in terms of between countries and their reputation. So I think what we need to do as a country is to address our investors. And when I say investors, it's not only FIIs or foreign investors. Today, we have a sizable cross-section of Indian investors who are investing in the Indian stock market, including institutions like LIC, which is also a listed company, as all of us know. So I think the way to go about this is pretty much, we have to prove, not prove, but we have to leverage the strength of our institutions, Indian institutions. So maybe I think one way to do this, as was done in the Hindenburg case or the Hindenburg allegations, would be to do a very rapid, sort of investigation by IRDAI and make the report public, so that any kind of speculation is totally cut off.
Right. So we need to remove the speculation, and that perception game has to be one for our financial institutions. Mr. Asher, do you agree with that? When Finance Minister has confirmed that LIC's investments have followed this rigorous, this board-approved standard operating procedure, due diligence has been done, tell us how the legal and compliance frameworks for a major public insurer like LIC, how does that reconcile the robust internal governance and the strong actual returns with the external, perhaps perception-based critiques that Mr. Guha is also talking about here?
Yes, I would agree completely with Mr. Guha. It's a question of perception. Two, there are extremely robust procedures as far as any insurance corporation is concerned. There are very, very robust SOPs which are there. There is investment committee which takes a decision, which forms the policy, where to invest, where not to invest. And these are not an ad hoc decisions which are taken. There is a complete framework, and IRDA does its regular inspection as well in relation to whatever investments have been made as well. So the point being, yes, there are robust procedures for every single insurance company, for every single investments which an insurance company makes.
Yes.
And on the basis of the set procedures, the set criteria, the set due diligence report, the set recommendation, so on and so forth, then only the investments are made. So it is nothing which is ad hoc, which is decided by an individual or by a committee of 1 or 2 or 3 individuals.
Mr. Subramanian, this is also a fact that several major global institutional investors, which include BlackRock, the large Japanese banks, all of them have subscribed to some of the same Adani bonds that LIC has participated in. Doesn't this broad international participation also help contextualize whether LIC's decision has been an unusual outlier, or is it simply, a standard investment choice based on available market opportunities at a given time? That due diligence process that we are talking about has been followed?
Yeah, good evening. At the end of the day, if you look at the entire debt profile of Adani Ports, if we look at Adani Ports as a legal entity, it's 80,000 crores. Out of which LIC wants to probably subscribe to that 5,000 crore bond issue in NCD issue in May 2025 at 7.75% interest rate. It was a 15-year-old coupon. And while LIC was the only institution which picked it up, it is a AAA rated bond. Any institution would like to be in the pecking order to pick up such a long-term bond with a debt profile,
yes,
which is AAA rated, which has a market beating kind of interest rate. So from that perspective, there is nothing wrong with a LIC's investment.
Exactly.
Look at it from the Adani's perspective. Adani's replaced US dollar denominated bonds with this rupee denominated. With the rupee going where it is now, all-time lows, obviously that's a benefit to the company. So from a perspective of both Adani's as well as LIC's, it's a win-win. So why are we even debating this? Why are we even debating this?
Exactly.
Giving credits. Neither is the issue from LIC such a huge investment that it is going to debilitate the investments of LIC. nor are the Adanis going to substantially benefit just because LIC subscribed to it, because as you said, BlackRock and many global institutions,
Yes.
GQG partners, everyone subscribes to it. The entire profile, be it equity capital of Adanis, be it debt capital of Adanis, all these are the numbers are fairly robust. Adani Ports as such is a free cash generating machine. It's probably the best operated, most efficient port operator in the whole world. Not only do they have port assets in India, they have assets across other geographies too, global assets, well diversified assets, free cash flow generating. What else does the investor need?
That's exactly what we're asking. And Mr. Sathe perhaps was underlining that point. Mr. Sathe, the insurance mandate, it often requires investing in these long duration assets, and where there is visibility in earnings, there is predictability over there. And considering that entities, we were just talking about Adani Ports, it holds India's highest AAA domestic credit rating from agencies like CRISIL and ICRA. So they would be, as far as the compliance fit is concerned, it seems to be like a natural fit within the typical investment universe for large insurers who are seeking stable and high-rated assets. Isn't that the way that LIC would function?
Yeah, see, two things. One is for insurance companies, and especially company like LIC, it needs to match assets with liability. We call it asset liability matching.
Right.
We have got long-term liabilities, so we want to match it with long-term assets. And from that point of view, 7.75% for 15 years is quite good. Secondly, as SOPs or the norms, as we say, there are exposure norms. If 80,000 crore is the issue, LIC has subscribed to only 5,000 crores because the norms do not prescribe that even if it is available at a very, very lucrative rate, LIC should grab more than 10-20% of it. No, it doesn't allow.
Right.
So there is a spread of investments as well.
Correct.
So there is nothing in the sense in the deal which is suspicious.
Correct.
As such.
Correct.
AAA rated, 7.75%, 15 years. What else is required? And whether others are investing into it is not something which is seen by LIC.
Sure. No,
and it's not
yes.
also.
No, absolutely. That's the larger point. And Mr. Guha, SEBI, recently, they closed several key investigations that are related to the 2023 Hindenburg allegations, and they found no evidence of stock manipulation or any rule violation, at least in that specific matter. So when you talk about the market's assessment of LIC's current exposure, should it be primarily anchored in these formal regulatory findings and the current balance sheet data rather than the initial turbulence of the Hindenburg period? Because it did cause turbulence. There's no taking away from that. But these are old narratives, and those too have been corrected.
Absolutely. And you see, I think if we are discussing the Hindenburg issue, we have to refer to the Supreme Court judgment, which specifically struck down an appeal which had requested for SEBI's investigation to be paused and the investigation to be handed over to an agency like the ED or the CBI. Now, in that case, not only did the Supreme Court allow the SEBI investigation to move forward, but that investigation actually concluded and came up with the key findings. So I think what we are talking about is a formal recognition and buttressing of the Indian regulatory institutions. And as the fourth largest economy, I keep on repeating that because it's a matter of pride for us.
Yes.
It is only time that our institutions again prove that they are equipped to rise to any challenge. And if it's an issue of a negative perception being created, all it takes is a quick due diligence of that particular transaction and making the findings public or semi-public, so that any kind of negative perception is removed. Let me just add one more point. You
Certainly.
see, had this been an Indian publication, the related point would be of defamation, because we are not only talking about removing negative perception, but we are talking about deterrence.
Deterrence as
Because
well.
I think these events have now become fairly regular.
Yes.
Where you have some article or the other
Exactly.
blaming a particular group or a particular company and linking it with the government. And it creates a huge sort of turbulence, especially in the political circles. Unfortunately, you see, today, I think, because of jurisdictional issues, the deterrence factor in terms of defamation is not very well defined.
Right.
It's very difficult, even if the report in Washington Post is proved to be baseless, it is very difficult to penalize any publication.
Correct.
for any such support. I think that's the main problem here, why
So-
these kind of things are happening.
Exactly, and let's get that legal perspective as well. Mr. Ashar, what do you say? Because when you talk about deterrence, when you have parties like Hindenburg involved, in this case a Washington Post, how do you even effect any kind of deterrence? In which case, like Mr. Guha is suggesting, then we need to do our own checks and balances so that that perception is corrected. But can we keep doing that? Is there any other way that you see?
No, unless there is a legislation which is brought about, then one will be able to have a check or a deterrence on this. But otherwise, on an ad hoc basis, one can surely initiate legal proceedings of defamation. And once there are some judicial precedents, everybody automatically will be in check.
Right.
In other words, that in order to get a deterrent, there have to be some judgments from the Indian courts, which would be a huge deterrence to anybody who is trying to malign and trying to publish any false or speculative news items.
Right. Fair enough. But also, Mr. Ashar, LIC, they've consistently maintained that all their decisions are independent and they've been made after due diligence without government direction. From a governance perspective, what is the evidence of independent function? Like following your strict SOPs, like internal audits, is it sufficient to address any allegations of any kind of external influence?
100%, because the policies are all transparent. The policies are examined by several regulators as well. Namely, the IRDAI looks at it, the auditors look at it, the internal auditor looks at it, the stock exchange regulations in relation to certain decisions look at it. In which event, how can there be things which one can say that, look, this does not meet with the requirement, this does not meet with the SOPs, this does not meet with transparency norms, so on and so forth. So the point which I'm trying to make here is that every single insurance company has an absolutely watertight regulations in respect of investments which are made by the insurance company. They have fiduciary responsibility. They have huge responsibility to the policyholders. They have huge responsibility to the regulator as well. So where is the question?
It's a very valid question, that where is the question over here, Mr. Sathe, with LIC's investments that are subject to concurrent auditors, statutory auditors, regular inspections by the insurance regulator, like you would know. So this continuing suspicion around its Adani positions, is it a reflection of actual unmitigated risk, or is it perhaps a broader narrative disconnect when you talk about the strict multi-layered oversight within India's financial system? Is what we have as the robustness of our financial system being brought into question needlessly in a way that it is attacking the way that our system performs and does our checks and balances?
Yeah, Vikram, you are absolutely right. And as has been discussed here, any insurance company, and LIC in particular, I will say, has an investment policy. Any change in the investment policy has to be reported to the regulator. And if regulator is not comfortable with that change, then it cannot be effected. Third is there are internal audits of LIC. There is external auditor, statutory auditor. On the contrary, we used to say that at some point of time, some auditor or the other is existing in the investment department. Because it's a continuous, and it is required also. I'm not saying that it is not required. Because such a huge amount of investments which are being made need to be properly made and without any exception. And you just imagine if just because finance ministry is saying you invest in this company, even if it doesn't fit into the norms or the investment policy, do you think any investment manager will do that? His employment is at stake. Why he will do that? So it is actually with narrative, as you rightly said. I think these allegations, but then it really impacts the credibility and defamation. I don't know whether LIC will file a suit or anything, and if it is possible to be taken forward, but it definitely impacts the image of the organization.
So that is the big question. Why are our financial institutions being subjected to this time and again, and how damaging could it be? Mr. Subramanian, We're talking about LIC's exposure to the Adani Group, which is less than 1% of its total assets under management, which is 55 lakh crore rupees, like I started out saying, and it's less than 2% of the conglomerate's total debt. When you're viewing the numbers in their totality, this public debate on concentration risk proportionate to the actual fractional size of this kind of holding within LIC's massive diversified portfolio, how fair is it? How damaging can it be to an organization like an LIC, in your opinion?
Nothing at all, zero. See, what happened? The Washington Post report came about 2 months ago. Neither did the Adani Group stocks react, nor did the LIC stock react. Okay, that shows that investors are very discerning. Okay, they read through this mudslinging. So I don't even agree with the other panelists that it hurts India's largest institution. It hurts Indian companies. Not at all. If anything, that just spotlights that these are the companies. So more investors will at least look at Adani. Somebody reading the Washington Post based out of Boston will suddenly get, Adani into their radar. So all I'm saying is that markets are intelligent. They read through such mudslinging and they go past these. So there is no need to worry about this. In fact, the only place where this is getting debated is in the parliament, which is anyway, I think there is a lot of mudslinging, the well of mudslinging, I would think. And two is in such news channels. Beyond that, I don't think anybody debates those Washington Post articles or other articles for that matter.
So let me take that across to Mr. Sathe, who was making the point about the larger damage that is taking place because of these kind of reports, say a Hindenburg report in the past or a Washington Post report right now. Is that damaging, according to you, for India's financial stability? Because we are on course as far as our economic drive is concerned. We are on overdrive. We have targets to meet. We have set our Viksit Bharat dreams, and they are in place right now. As we charge towards them, Mr. Sathe, what is your assessment of the kind of damage that these kind of reports do?
See, it's not on stock market whether the price has come down drastically or not. That is immaterial. The perception of the people, how many do invest in equity? Not many. How many are exactly retail investors of LIC? Not many. So the question is general perception of the people when they read such reports. It says, oh my God, something is happening wrong. Let me not invest in LIC as a policyholder. So this perception is created certainly, and especially on the backdrop that now follow-on public offer is likely to come. So the share market, share price should not get impacted. And that has been announced because SEBI has mandated that follow-on public offer has to come now. So the price should have gone up because even now in the first initial IPO, the price at which it was offered to the public, it is almost hovering around the same amount, same rate. So that is something which is damaging. That is what is my view.
Mr. Subramanian, would you agree with that? Would you concede that much ground that sometimes, when you're looking at more exposure in the markets, etc., the perception game sometimes has a bearing on how stocks move and how those prices pan out?
No, I think Mr. Nilesh Sathe's point is concerning retail investors who are, of course, increasingly flocking to the markets and buying everything and anything available in the market. But the discerning investor would read past those, would look at cash flows generated by the Adani ports or other Adani group companies, would look at LIC as a widely diversified, robust institution which has a legacy, which has a history, which is not person dependent. It is process driven. All internal processes at LIC are process driven. It is, if anything, one can fault LIC for its being more tardy because of processes than it being individual driven or very ad hoc driven.
Sure.
So,
Mr. Guha, I want to take that question across. When market perception conflicts with regulatory findings and, the financial data that is before us, is any kind of targeted criticism, the kind that we are discussing and debating over here, of core infrastructure investments, is it really leading into unnecessary instability for the institutions that anchor India's financial system, as it were, which is quite robust right now?
No, I don't think so. I agree with one of my fellow panelists when, he says that this will not, damage LIC in any particular way. But I think the issue is perception.
Right.
The issue is of strengthening the perception about Indian regulators. So I think this is an opportunity for Indian regulators to act, with full speed, conduct a sort of focused inquiry, and come up with the findings and make it public. Because that will only increase the confidence of current and potential investors, whether they are foreign investors or whether they're Indian public investing through mutual funds.
What is turning out...
It will only strengthen the perception of our institutions.
Well, what is turning out to be quite clear tonight from all that my panelists are telling me is that targeted criticism, especially when it involves institutions as central as LIC and companies as critical as the ones that we are talking about, part of the Adani group or any other large industrial group that is shaping our momentum, economic momentum right now, it doesn't just shape headlines, it shapes perception. And perception can have real consequences for India's long-term investment cycle and financial stability. So a debate like this reminds us why facts and transparency and a steady hand, they matter when nearly every Indian household savings are involved in these very large, very robust financial institutions. So my thanks to our guests joining us on the show, Arindam Guha, Sanjay, Nilesh Sathe, Shriram Subramanian. Thank you very much for joining us with your insights on the show tonight. The big question, of course, keeps raising the big ones, and of course, we will keep seeking answers. But for the moment, from me, Vikram Oza, and the entire team, thank you for joining us. Good evening.